Did you know that in 2022, over 14 million Americans took advantage of the Home Mortgage Interest Deduction? But are you one of them? In this video, we'll unlock the secrets of maximizing your savings through the Home Mortgage Interest Deduction. Let's get started. 1. How to take the Home Mortgage Interest Deduction. Taking the Home Mortgage Interest Deduction can be a smart way to reduce your tax bill if you're a homeowner. So, what is this deduction all about? Simply put, the mortgage interest deduction allows homeowners to reduce their taxable income by the amount of interest paid on their mortgage within a tax year. This can be a significant saving, especially when you consider the recent interest rate hikes, which have increased the cost of borrowing for many. In the current tax year, understanding the mortgage interest deduction is more relevant than ever. With interest rates on the rise, homeowners might be paying more in interest, and this is where the MID can help lighten the load. It's like getting a discount on the increased interest you've paid throughout the year. It's also important to note that there are limits to how much interest you can deduct. These limits depend on when you took out your mortgage and the total amount of your mortgage. So it's not just about how much interest you've paid, but also about understanding these caps. 2. Let's understand the mortgage interest deduction. What is mortgage interest deduction and its purpose? Mortgage interest deduction allows homeowners to reduce their taxable income by the amount of interest paid on their mortgage. It's designed to make owning a home more affordable. Who is eligible? Homeowners who pay interest on their mortgage can claim this deduction. You must itemize your deductions on your tax return to be eligible. Types of loans that qualify. Various loans qualify for MID, including private loans, mortgages obtained through private lenders, government-backed loans, loans backed by government agencies, refinances, mortgages taken to replace an existing loan, home equity loans, loans borrowed against the value of your home. 3. Eligibility and limits. 1. Eligibility criteria. Homeowners who have taken a mortgage to buy, build, or improve their home. You must itemize your deductions on your tax return to claim MID. The mortgage must be secured against your home. 2. Limits on interest deduction. There are limits on the amount of interest you can deduct. These depend on when the mortgage was taken out. For mortgages initiated after December 15, 2017, the interest deduction is limited to the first $750,000 of the loan. For older mortgages, taken out before December 15, 2017, the limit is up to $1 million. 3. Impact of mortgage start date and marital status. The start date of your mortgage affects the deduction limit, $750,000 for recent mortgages versus $1 million for older ones. Marital status also plays a role. If you're married and filing separately, the deduction limits are halved. Understanding these criteria and limits is crucial for correctly claiming the MID and optimizing your tax savings. Remember, the specifics can vary based on individual circumstances, so it's advisable to consult a tax professional for personal guidance. 4. Itemized versus standard deduction. The Tax Cuts and Jobs Act significantly changed the landscape of deductions. It increased the standard deduction, making it more appealing for many taxpayers. Choosing between itemizing deductions, like the mortgage interest deduction, and taking the standard deduction depends on which option gives you a greater tax benefit. If the total of your itemized deductions, including MID, exceeds the standard deduction, itemizing is better for you. Homeowners should also consider other tax breaks that require itemization, such as property taxes and charitable donations. If these, combined with the MID, exceed the standard deduction, itemizing could be more advantageous. It's a balancing act. You'll want to calculate both options to see which saves you more on taxes. Consulting a tax professional can also provide clarity specific to your situation. 5. Claiming the mortgage interest deduction. 1. Gather necessary documents. Collect your mortgage interest statements, known as Form 1098, from your lender. This form shows the total interest you paid during the tax year. 2. Filling out tax forms. Use Form 1040, the U.S. Individual Income Tax Return, for filing. Schedule A, Form 1040, is where you'll itemize deductions, including mortgage interest. Enter the amount, limits, and how to choose between itemized and standard deductions. But remember, Every financial situation is unique. If you're unsure about anything, consulting a tax professional is always a wise decision. Don't forget to like, share, and subscribe for more helpful financial tips and guides. Your support helps us create content that empowers you to make informed financial together, making it simpler and more accessible for everyone. Thank you for watching and see you in the next video.